Well, Lou, thank you very much for coming in to your beautiful room downstairs and letting me come to your offices here today. It's good. I've heard you speak multiple times, and it's my first time getting to kind of talk to you one-on-one. So thank you for letting me come down. You've got some really good stats that we'll get to just around kind of how Q2 operates and the scale and size that you all are. But for the hopefully thousands of people that are watching, probably more likely hundreds, that are not familiar with Q2, do you mind kind of sharing with me a little bit what is Q2? And,
Sure.
And I know some people in Austin think you guys are a soccer stadium,
Sure.
but for the folks outside of Austin, they might not have any idea.
Yeah, Q2 Stadium's been a great advertisement for Q2, but Q2 is actually a big local tech company here in Austin. We have about 1,400 employees in the Austin area, but we're 2,500 employees globally.
Okay.
So we're actually bigger globally now than we are locally. But Q2 provides the online banking experience for about 37 million users logging into Q2 products. Most popular is our online banking platform, which has about 24 million users logging into it. So we sit between those millions and millions of users and about 1,400 banks and credit unions. And those folks move about $3.5 trillion a year.
That's so much money.
It's about just a little under $10 million a minute and about 900 transactions a minute.
I saw Jamie Dimon said they move $1 trillion a day. Does that number sound close to
potentially?
I
guess when you think about the big four, which we do business with, but primarily our mission. We're a mission-driven company. Mm-hmm. We want to help the local communities where we all live have a local financial institution that invests back into that community. We want that local financial institution to be able to compete with the big four.
Yep.
And they do that with technology, right? And when we're online and we Google, I want to do a car loan, we Google, a financial institution, you all look the same.
Yep.
And so technology is the great leveler of the playing field. So those big four, they have trillions of dollars under management. But unfortunately, they also make investments globally, and they move the money out of that local community and where the local community-focused credit unions and banks are really investing back into the cities.
Keep it in there. On the breakdown of credit unions to banks from the customer perspective, how do you have, is it 50-50, or do you see credit unions more?
Yeah, so credit unions, heavy retail, and so they drive more users to the platform, where banks are more business focused, and so we have 2 million businesses on our platform. Mm-hmm. The number of users behind those businesses are a little bit obfuscated, right? But again, both are kind of important, but different experiences. The retail experiences, the credit unions are looking to create reasons for people to log in and spend time on that URL, doing other services and other things with that financial institution. On the bank side, they provide services for that person to run their business. So payroll.
Commercial side of it.
Exactly right. Yeah.
And credit unions typically don't have a commercial, or it's not
a different
part of the charter.
Different charter. Yeah,
Got
different charter. And yet, banks are now talking about user experience being important, and all the credit unions are talking about business banking.
Yeah, how do I get in? Yeah, how do I get into that?
Because there's money to be made there, right? So they're kind of blending those sides together.
You said about 1,400 in Austin, is that correct?
1,400 employees in the Austin area.
Yeah. Does that? I mean, Dell is the largest on the technology side, at least from my understanding. Some history there too, but does that put you guys at? I mean, is Indeed next and then Q2?
Well, it depends on how you look at technology, I think. But we're in the top 10 for sure.
Yeah.
I think when rocket companies show up and build here, then they're a technology company too. Probably not in the same space as ours.
Yeah. Maybe more computer focused and less. I understand what you mean by the rocket company thing. I always thought it was interesting growing up here in Austin. It was a very infrastructure focused city. Didn't have the cool Silicon Valley stuff, and there weren't Ubers popping up and consumer things. It was always just computer chips and DSPs and low-level software and mainframes. And I think Q2 like that as well too. Just for as large as you all are, If you were to go poll the high school kids down the street, you know, what does Q2 do? I don't know.
Right.
So you made a comment about Q2 is a white label of a white label. What do you mean by that? You mentioned that a few meetings ago when we talked.
When you think about our customers, they lean into their markets with their brand. Mm-hmm. And so that usually trust is part of that brand. Mm-hmm. And so that end user's got to be able to trust whatever device they're on, whatever network they're on, whatever time of day, they can get to their money, and that financial institution is going to keep their money and their information safe. Mm-hmm. Well, that digital branch they're logging into is actually Q2. Okay. But you never see Q2 on any of the stuff. It's all branded by that financial institution, and they're very differentiated from each other, right? So because they are sometimes even competing with one another, and so Q2 is just what powers it all. But you'll never see a Q2 logo on there, which also means that Q2 as a business, the enterprise, you know, we're like any other company. We have accounts payable and accounting and sales and development and all those things that make Q2 the company. And we have our own cyber risk footprint. Mm-hmm. But really our biggest cyber risk is the 500 digital branches that we support. And the hackers trying to hack into one of the financial institutions, which just happens to be Q2.
Yeah. So that, and I wonder if folks recognize that or know that. But, you know, there was another stat I heard, 1 in 10 users of online banking in the United States are going through a Q2 product. I mean, that's
logging into a Q2 product. Yeah. So when you think about the $3.5 trillion, that's more than 10% of GDP. So
that's crazy.
So a lot of money flowing through us, and you know, we take that fiduciary responsibility of protecting that money because it matters to the U.S. economy. Yeah, and so we don't take our security posture. You know, it's differentiating for us.
And maybe that's a good segue. I've seen you've had many titles since we've been working together over the years. Chief Availability Officer is one I don't think folks are probably very familiar with. What does Chief Availability Officer mean to you, Lou, and what does it mean to the customers?
Yeah, it's a funny title for sure. Yeah. But it's a pretty cool job, and really, I'm part of the team that's accountable for the availability of the services, the performance and the quality of the services we deliver both to the end user of the financial institution and to the employees of the financial institution. And because they come from hosted sites, then I'm accountable for the compliance and the security of those hosted sites. Mm-hmm. And there's shared responsibilities, of course, with other teams, but I'm the one throat to choke for all this stuff. And so we spend a lot of our time working directly with our customers, because again, they have I get the benefit of 1,400 customers. They all have a CIO and a great tech team, mm-hmm. a CSO and a great security team, and most of them have a risk and compliance team. Yep. And so they have to get comfortable that they're going to be compliant, secure, and represent their financial institution based on the services and the job we're doing for them. So
I never really thought of something until you just said this, but would you say your customer is the end person of the credit union logging in and using the systems, or is it that CIO so it's more of the actual employees of the institution itself? Yeah. I guess that makes sense, because then they're the face out to those customers, and you're interfacing there. So it means from a product team perspective, maybe they're competing for, hey, the customer, the end user wants this. Like, yeah, well, maybe we don't do that because this is what our end customer actually. And do you ever fight over that at all? Or?
Well, those technical teams, the business would come to them and they would go build the product for them and they would host it for them. And now it's just, as we all go through this transition, you know, we used to always buy our servers and host our own mail exchange. Mm-hmm. And then eventually it just gets to the fact that to deliver a great experience with mail that's integrated with everything else, you can't do it at the cost that you can subscribe to
from
Office
Microsoft, just
365, right?
Yeah,
so we're that solution, right? Where it's just so complex now. There's so many different technologies, the skills that you need to have, 9 different database types, and the volumes and the security, and it's just at levels now where we get to spend for 1,400 businesses and hopefully help the financial institution punch above their weight class in things like security.
Yep.
where they have access to things that they probably couldn't have access for if they're just spending for one business. And we get to spend for 1,400 of them and bring solutions like ALTR that would be beyond their grasp, and it wouldn't make sense for
it. Probably wouldn't make sense for them to individually have it.
Right.
Some of them we've noticed we share. Gosh, at least probably 8 or 10 of your customers are now also ALTR. They've gone down the data journey, mostly through some of our partners like Passerelle and some of the other ones that are working with them together. But I think you're correct. For the majority of the customers, Q2 side, ALTR would maybe be an overkill piece for them, and we'll get that in just a minute. Want to just ask, and then we'll maybe transition to kind of how you guys operate today. You're moving from the data center into the cloud now. You've always had a strong security posture. You've always had a strong availability posture. Just do you have a stat on what if Q2 is not operating? What's for 1 minute? What's the issue? Like,
sure. Well, you heard
some
of it before, but there's roughly 34,000 logins a minute to a Q2 product.
Okay.
We move about 900 transactions a minute. It's about 9.7 million a minute that happens. If you just spread it like 20, over 24/7 during peak moments, it's probably 4 times that. And so when you think about those 34,000 people accessing their money, there's new levels of regulation now to say that if you're between people and their money, if there's any hint of an outage that could be up to 4 hours, so not that it's happened for 4 hours, but could go for 4. We have to let the regulators know because it's a disruption to the market. Right?
And maybe they'll have to take action, or they'll have to redirect funds. I mean, I can imagine needing to go in and transfer money to your kid at school, to pay their bills for college or something, and you can't log in, you can't do that, and that'd be a bad day.
And there's payroll, and there's automatic rent and child support payments and all that stuff that happens timed very well to when your paycheck goes in.
Right.
So we disrupt that flow. The downstream impact of that is tremendous.
It's a big impact.
Yeah.
Traditionally, you guys have been running in the data centers. I know you're undergoing a big effort to get to the cloud now today. How's that going? Are you guys on track? And do you miss anything about the data center?
Sure. Well, the data centers, I bring a history of data centers with me to Q2, and I've been at the company now 12 years. And so there certainly are familiar. There's certainly something about being able to put your hands on things that gives you a comfort that you're in control. But the cost to be able to do it at scale is expensive to buy the equipment and keep having to replace the equipment versus renting the equipment and making it somebody else's problem. When you think about our data centers, we have 2 data centers. We spent about $450 million in them. We made them active, meaning that the services were constantly coming out of both data centers at the same time.
Okay.
And we were testing if there was ever a problem with a server in one of the data centers, we just stopped sending traffic there, and the other side took over it all. So the concepts of failover and failback, those were all ancient type conversations. So our active allowed us great uptime, right? Because it hid about 93% of the problems from the end customer. So it solved the problem, and they wouldn't know it happened.
And the majority of that is the database servers themselves, the application servers, your firewalls, everything's communicating together, right? And so it's Q2 is not having to engineer that availability uptime. It's the services.
It's double everything, and it writes to a common database, but that's virtualized and it's right into physical double physical infrastructure. So very expensive way to do it.
Yeah.
But it's one of the reasons why our uptime is so high.
But it's what you need to get there. Are you finding you find that more challenging with the cloud, or less challenging? How's that been?
That's a great question. The cloud is less mature in this kind of architecture. Now, Amazon and Azure and Google, their infrastructure's that way.
Yeah, they themselves.
Are very. But the technologies that we use don't just naturally become. You can't just drop it in those clouds and they become that way. So there's some re-architecting. There's some changes of technology, and when we went. If you consider 10 years of continuous improvement to get to where we are, the cloud doesn't get this 10-year journey to get there. It has to start here and go up.
And go up from
the
there.
expectations are better.
Yeah.
And so We have spent some time looking at the way we use availability zones, which is the cloud's way of having multiple data centers serve the same business, same services, multiple availability zones, and then regionally distributed. So we're coming out of both regions, just like both data centers.
Right.
Only these are from across the country. And so it's resilient with the availability zone with 3 data centers, and then resilient because we have multiple availability zones in a region, and then resilient because we're coming out of multiple regions. So it's a little over the top.
Right.
And in fact, initially our cloud provider thought maybe it was a little bit overkill, and they worry about that stuff because it costs money.
Right.
And it adds complexity to it all. Now that they've seen it in action, they love it, and we're actually on stage with them talking about this type of architecture for future for other people that need that.
I think didn't Jordan just went up to
AWS reInvent.
Yeah, AWS reInvent. Yeah, he was up there talking about it. You made an interesting comment. I think when I think about the cloud, I think about it being innovative and leading and all these things. But that statement is true that it is it's immature relative to what's been running and operating businesses for a long time. You mentioned that AWS is listening and learning and kind of growing with you all. Have you found that to be this path is going to be successful and you guys are going to be able to stick with it and go from there? Will you keep anything around after, say, this year or next year, or is it you're going to be fully in AWS?
We'll be fully. It's been a 3-year journey, and the data centers lease expires January of 26.
Okay.
So our intention is to be out of there. Now, there may be physical connectivity to some services or something that we need a rack for or something, but it won't be any of our services in there. I think it's more complicated to keep a long tail and trying to manage that separately. If you were to redesign everything from the ground up, you would design with the public clouds being imperfect. And you design the resiliency into the way the application lives,
right,
versus when you start with data centers, you make the infrastructure perfect, and then everything that sits on top of it gets the perfect infrastructure.
Right.
Up in the cloud, that infrastructure is not perfect, and so you have to build that kind of resiliency into the software. And so as we kind of we're moving more and more of the resiliency and the security, frankly, into the product itself.
Right, because it's less control of those. It's that shared responsibility model and matrix, right? Starts to shift, and while you lose certain things you have to be responsible for, you don't have to worry about the physical access or like that anymore. You still, in fact, even more probably so at that application layer and data layer. That's really all you get to control at that point.
Exactly.
It makes sense. What's been the biggest benefit for you? I mean, are you able to do things now that you weren't able to do? Are you moving faster? Can you do larger?
I think
workloads, things like that.
I mean, that's the right question to ask. It's I think our cost profile to do what we did changes slightly, mostly as we continue to scale and grow. The cost curve will be hopefully lower than the revenue curve that we experience today in the data centers. The data centers, these are physical stuff we have to buy. We refresh it every 3 years. Storage, millions and millions of dollars. We refresh that every 3 years. And so there's these big lumpy capital purchases that you then have to carry that depreciation for years and years and years. In the cloud, you rent it all. So you don't have to carry that expense. I wouldn't say it's cheaper. Like when you think about, we were running about 85 to 87% capacity on our physical infrastructure.
Okay.
And so when I buy something and depreciate it for 3 years, I can do that cheaper than rent something every month from a cloud provider. But the way the capital outlay is, it's a monthly subscription versus these big purchases I have to do every year.
Right.
And so there's a cost of money to do it all that way. I think the cloud will allow us to move faster. I think it'll allow us to adopt technologies. Now, part of that's just in the discipline of pipelines and the discipline of the way you introduce new technologies that you take on. But and we've been an orchestrated workload even in the data center for a number of years now, so we've enjoyed that benefit. Moving up to the cloud, then now we get to say, do we want to manage and build our own orchestration infrastructure, or do we want to use a cloud native service for that? And so we can partner with more companies to that maybe do a better job on a certain thing, or do it at a scale that we can't do, or bring technologies that we haven't don't have experience with. So we can partner with more partners now to deliver the end solution than ever before.
So that would be, instead of having to run like an entire Kafka setup yourself, you could just use a managed or a hosted instance. Yeah.
Same with Kubernetes.
No longer are you having your Microsoft SQL Server clusters. You make that somebody else's problem. That you can focus on those. Last question on the cloud stuff, and then we'll talk about data for a little bit. When you presented to ALTR earlier this year, you mentioned SLA versus XLA. I had not heard of XLA before. What is that?
Sure. I think a trendy topic has become about the end user experience. And so I think we all live in a world where we're trying to deliver a service to our customer. We're trying to do it with quality. We're trying to do it with speed. And then we have this cost component, and that's all part of that. And it's always been kind of this joke of this triangle where you get to choose two sides, but you can never choose all three. And
that's you can have two of the. This is what Chris Strutman always says. My partner. He's like, James, you can have two of the three. You can't have them all. I'm like, why can't I have them all? He's like, pick two.
Right, right. And the reality is, I think us standing in front of the customer is they expect all three. Yep. So that's the hard job.
Yep.
So service level agreements, SLAs, are typically the contractual math that we put into contracts with customers that say we have synthetic tests that are banging on the system, doing things, making sure things are up and running. And if they fail, then the service is down. If they're up, then we consider the services up, and we write this into a contract at certain levels. And if we fail to meet those commitments, then there's penalties and checks back and those kind of things. And so those are service level agreements, and they're pretty standard. I have them with our vendors. I'm
very familiar with your requirements.
Right,
here. Yeah,
right.
You guys matured us really, really quickly. It was great, and we are much better for it. But man, those first couple months were Chris and I were staying up at night like, holy crap, are we going to be able to do this? And you guys worked with us, and
as good as we think we are, the customer expectation keeps growing.
Yeah,
faster,
right? So it does.
The next customer wants it even better, and the next customer. When you think about our daily lives, when's the last time you gone to Amazon.com and it didn't work? Right, it's always up.
It's always up.
Right.
Same with Google. Same with Google Maps.
Right.
If these things aren't working, my first thing I do is go down detector. I'm like, it's got to be the ISP, right? Like, there's no way Google's down. So the expectations are pretty high.
Pretty high. So everybody in their everyday life is used to things always being available, and so that when you think about access to their money, that's even more important. So it should even be better. So so the service level agreements then are these synthetic tests that we run on all this infrastructure, make sure it's up and available for folks, and then we can report back. Here's our test every minute. It works like this. If my synthetic test logs in, I then assume that the platform's up for all the users to be able to log in. Mm-hmm. Once in a while, that's not true. Now, what we're trying to do is move to more of a customer experience level. So what the actual end user sees and feels as their journey through our application. Mm-hmm. So we're moving now more to measure actual users logging in. How many of them logged in? How many got an error?
Yep.
What was the time of that? There's a range of timing based on device and networks and stuff, but what's an acceptable range? What's outside that acceptable range? And then quality is kind of the more important one around what did they do when they were in the platform, and was it successful? So sometimes it's making an international wire, sometimes it's moving money between accounts, sometimes it's buying a service from the financial institution.
Like a loan or something.
Like a loan, right.
Yeah.
And so all those things are pretty tough to actually build synthetics around, right? We can log in every minute, but we can't do an international wire every minute, right? You can't actually move money. So we're trying to move the way we look at evaluating ourselves from this service level agreement to this customer experience level agreement, and so we call that XLA, and actually measure real people doing real things and how good we are at that. Mm-hmm. Now, we've been working with Gartner over the last 6 months, asking that question around, hey, are there people that are really good at that and made that journey change? And with that said, I'll big bore and steal any advice they have. It turns out a lot of people are talking about customer experience, but very few are actually have moved it into this kind of measurable thing that they're willing to, replace SLAs with.
How do you measure that? Are you speaking to, because your customers are the CIOs and the security teams and the operations teams at the financial institutions? Are you getting input from their customers to you, and that's how you measure it, or is it programmatic at all?
Yeah,
anymore,
it's all automatic. So
Okay,
we
all right.
measure all the user journeys, whether that's employees at the financial institution or end users.
Okay, so you're measuring like the back office of the FI as well, because that's your customer.
That's a
Yeah.
different. That's a different experience, right?
Yeah, got it.
And as well as the front end, because again, they're accountable to the user experience for their end users. So we've got to measure that as well. And then what I think we still have some work to do. So we have all this. So all 34,000 logins a minute. We can see how well we're doing on that. All the 40 million transactions we do in a month, we can see how well we're doing on that now. So we see all this stuff.
Yep.
Now, to rate the right level of pain if something doesn't work, we're still working through that.
Yeah, like what is, if the back office person has to refresh twice versus an end user makes it through okay, was that painful or not?
Or an ACH is a great example. So this batch money movement that a business does, they do several a day, 15.
Okay.
So they'll do 500 a month. Mm-hmm. One fails. So
Yeah.
for us, that's 1 out of 500. That's pretty good.
Yeah, it's pretty good. Yeah.
But that one that fails costs them 8 hours of rework. A whole bunch of people, thousands of people didn't get their paychecks.
Yeah.
The bank ends up having to apologize, so it's reputational damage. People are really upset that rents were due and they didn't, balance checks. I mean, so that one, even though it's 1 out of 500, is pretty important one. You think about wires. We do 40 million transactions in a month. 1% of those are wires. But that one wire that you're pushed to buy a house, pretty important wire.
Pretty important.
Right? And so if that fails, it's like, but for me, that's 1 out of 4 million, right? 40 million. So
I can think of, back in the days when we were taking the angel investments, people were, sending us money to start the company, and sometimes they said, hey, I sent it and it wouldn't come, and my insides would just melt away. I'm like, oh my gosh, do they not like us, or is it it's way different than trying to get directions to a hamburger place
Right.
and having it not work.
Right.
It's money is such a critical thing. I thought that experience thing was a good measure. I think it's a better. The product's meant to provide an experience. It's not meant to just be up and available all the time, right? It's otherwise it's just useless kind of.
And for teams like mine that have to wrap resiliency and security and compliance around the services that we deliver, we have to remember that we can't add friction to that customer experience.
Yep.
And because and when you think about how quick it is to change nowadays, you find something on the internet, you use it on your phone, you love it, but if it starts not acting great, you didn't pay for you can just
quickly move over. Yeah.
And so your financial institution is a little more sticky than that, but there's lots of options. And so you're not married to anything anymore. And so you can pick up. So I think our customers look at trying to earn the business all the time.
Yeah, you got to.
Every
what have you done for me today? What have you done for me
today? And a lot
today?
of it's only digital. A great example is I haven't stepped foot in my financial institution for years.
Yeah.
Right. And it probably, the branch was where I used to live. I've moved twice since then. It's not, but it's all online. So what do I care, right?
Well, it'd be a much different experience. I think I changed banks when I moved to Chicago because there were not any branches of the bank I was with before. If I moved to another city now, and I would just probably keep my bank because I wouldn't really need to. But at the time, going into the branch, I couldn't find one. I was like, oh my gosh, we have to. This was 10 years ago, but we have to switch banks because there's no local branch. What am I going to do? Now it doesn't matter. I will say I do go to the branch to get currency. So if I'm going to go travel overseas, I'll go get the dollars back from there, but that's about it, I think. So it's kind of funny how that works. And then we do have some customers that are the digital only types of, and I look at their websites and their products all the time because we secure those products. They make it pretty easy to switch. It's pretty automated now, and
we have tools for it too, right?
I know. Yeah. That's maybe a good segue too. I know ALTR does a lot of work with Q2. We're involved in a number of different applications providing security across different areas. One of them is that kind of card switching and account switching application too. But wanted to focus on data if we could, and we'll just wrap up here in just a few minutes. And I appreciate your time, Lou, for hanging out with me. I know you guys, as you're moving from data center into the cloud, had to make some decisions on where you're going to store data, where you're going to process it. You guys are generating, I've looked at the numbers before I came over here. It's a ridiculous amount of information that you guys are generating. I know you settled on the Snowflake platform to do a couple different things. Do you mind just talking a little bit about why that particular platform and kind of what it enables
Sure.
For Q2, and then just a little bit kind of how you think about the security of it?
Sure. You know, Snowflake, first of all, good partner. You know, they bring their own set of innovations. You know, if you think about our customers, they're banks and credit unions. They're a little bit risk averse,
Right.
To change, right? But they know they have to be competitive, and they got to be innovative to be competitive. So they outsource that to people like Q2. So we've got to be innovative for them, though we're under the same pressures for compliance and regulations and security that they are. We're audited just like a bank or credit union.
Yeah, but times 2,000, because you're doing it for all of them. Yeah.
All of them. But you know, so we can't avoid, you know, change. We just have to get good at it, and so we have to bring that innovation to them. And when they think about Snowflake, they have a certain set of technologies that are unique and very powerful. They have a whole marketplace of partners that provide extra services and can really amplify that reach. And so those are things that we want to be connected to because it will move our innovation faster.
Right.
Particularly in our use case, we have a couple of different use cases, but one is internal, where we have a lot of detailed auditing of what people are doing on the platform. Mm-hmm. And some of it is interesting in the user journey. Some of it's just a data that only Q2 would find valuable, but it's really lots and lots of data. We used to store that in our own databases. You'd have to pay for those database licenses and servers and performance.
Buying disk. So much disk.
Backups and all that stuff. And then you have to secure it as well.
Right.
So one of the partnerships that we have with Snowflake on underside for Q2 on the product is that we take all that kind of data and put it out in Snowflake.
Okay.
Another thing that we're using Snowflake for is because, again, it's such a brand name. Lots of our customers are using Snowflake for other reasons.
Yep.
So they're comfortable with the platform, is that there's a higher and growing expectation of sharing data with them.
Right.
And so they want to build a data warehouse. They want to build a customer 360 view. They want to know what's going on. And so we now we have a streaming bus internally that communicates between all of our various components of our infrastructure. We've now tied Snowflake as a stop on that bus. And so near real time, these transactions are now put into the Snowflake instance that we can snap a customer-facing mirror on.
Yep. And
the customers can build on top of that in near real time what's happening in the platform. A concept that would be impossible to do before.
And the architecture that Snowflake has, I think, is what enables that to be very easy for you all to consume and makes you allows you to focus on the applications and the use and not the infrastructure component of. Because you're right. I mean, if this was still back in the data center days, you're not going to give VPN connections into all these things and
I make it a
service
bunch of
accounts and
then what would be the common thread that the customers could consume?
Yeah, no, it'd be everybody running their own things. Your DBAs would get pissed off because somebody ran a query that now is slowing down another customer, right? So the separation of storage and compute, very helpful for you guys. We at ALTR, we do encryption and tokenization of data inside your mainline product, but also inside of Snowflake as well. When you were evaluating Snowflake, they do a good job of having good network policies, good disk encryption, other things like there. When you looked at ALTR and adding our format preserving encryption to that, what were the kind of thoughts or the messages in your head to the customers about why you're doing this and what the benefit is?
You know, if I was to kind of give advice, right? We think of our security posture as layers. Mm-hmm. And there's this concept of outside in and inside out.
Okay.
And so the layers are designed knowing that threats are coming at us. So they hit the first layer, there's challenges there, they get through. We don't know how.
Right.
That's the whole point. They got through somehow, right? The second layer has different challenges, and the third layer has different challenges. And so the idea is, eventually, if they want to get through, and it's North Korea that can spend a country's money to do it,
Right.
they'll get through. But we try to make it so costly and time-consuming that they go on to easier targets, right?
Yep.
And much of our data shows that. So a good example is credential stuffing. The average credential stuffing, we get attacked 500-600 times a month. The average attack was about 9,000 minutes.
Okay.
Back a couple of years ago. Today it's about 150 minutes.
So they give up and move on.
They realize we're protected and they move on to an easier target, right?
Got it.
That's a perfect example. But so when you think about the outside in, those layers you put between the internet and your applications, well, assuming they're going to get in, now you have to do the inside out, where
Right.
you go, okay, what they're trying to get to is the data.
Yep.
So how do we start protection with the data itself,
Yep.
and then build layers up to meet the outside in, inside out? And so ALTR is that perfect example where we just take the sensitive data right out of the environment.
Yep.
And now it's a token. So we're protected should all else fail.
Yep.
They get there, it's protected. So now we have this incredible posture, award-winning posture here in the data centers or in our managed environments. Now we take that data out and give it to a third party.
Yep.
Now, even a trusted third party like Snowflake, I can't, I call them trusted, but the reality is I can't trust them.
Yep.
I can't trust their security's just as every bit as
It's
good
the
as mine,
same.
probably.
It's the same as when you're buying servers from Dell or HP, or when you're buying databases from Microsoft, or connectivity. It's trust but verify, right? Or it's implicit that you have to be just
And again,
trustful.
when you're using somebody else's infrastructure, then more of the security and resilience has to be built into what you're giving them. So
Right.
whether you're giving them an application or giving them the data, you got to build it into the data.
into the data there.
And so that's where ALTR's Snowflake plugin works so well for us. And the fact that it preserves the format works because now we have a bunch of third parties building on it, and they're building reports and they're building dashboards and they're building things that if the token that replaced the phone number is not looking like a phone number, then it's going to blow up the reports and it's going to blow up.
It's gonna mess everything up.
Mess
Yeah.
it all up. So now this gives us that kind of foot in to folks that allows me to widely distribute and share data, which was not going to be possible just before this.
I mentioned earlier in the discussion about how you all really raised our maturity of our platform and our offering, having to keep up with all of your customers. I mean, you put us in between your transactions, and we really had to mature. And the team's done a great job. It's the numbers now that we're doing with you guys in Snowflake. I get them wrong all the time. Chris tells me I'm behind, but I asked him last week what it is. I mean, it's hundreds of millions of rows an hour or something like that. I mean, it's just incredible what you all are doing and generating, and we feel very lucky to be a part of it, and that you guys trust us to do that. Because as we talked about earlier today, we're not securing a driverless car or some food delivery app or something. This is people's lives. It's people's money. And we take it very seriously. And I think Snowflake does as well. They really have enjoyed you guys, as a user and a consumer. And this year is going to be really fun. You guys are doing a lot with data. We've seen the plans. We're part of the discussions. The testing's going well. So it should be exciting. But man, it's a lot, Lou. And I hope people, when they listen to this, if they take anything away, it's just the amount of effort that goes into what you guys do. I mean, I mentioned earlier that Austin kind of always has been under the radar in terms of tech stuff, even though it's a big tech place, a big tech city, but it's the things that get done here I don't think are understood or celebrated very much, as opposed to some kid gets $1 billion because he made a picture look cute, or something. That stuff is cool, but it doesn't fundamentally impact people's lives if it doesn't work.
Yeah.
And it's just, I'm proud to be partners with you guys, and I know Snowflake is too. So well, Lou, thanks, man. I appreciate it. I know you're a busy guy, and I just wanted to chat with you here. So
Well, thank you.
And
Again, ALTR's been a great partner. I think we started late in 2018.
yeah,
And so if you think about the growth and the trajectory and the changes that we've gone through, and you guys have gone through your own changes and growth, and we've managed to keep up with each other. And so that's not many folks, not many partners have been able to do that. So congratulations to you folks, and thank you for your support. It's differentiating for us. You're part of the awards we've won.
Yep.
You're part of kind of how we go into the market. So it matters,
Yep.
and what we do matters, and you're part of that solution.
Yeah, I mean, it's what we focus on every day. I tell the team, we wake up to make sure that other folks can focus on the things that they need to do. Our sole focus is to secure data. That's it. If you're doing anything else here, there's the door. You no longer work here.
Yeah.
So that's what we're focused on. Cool. Thanks, Lou.
Thank you.
Yep.